Hey guys, welcome to today's trade breakdown for the last day of the month, 31st of October. In the open, we got a 30 pip, slightly under 30 pips. Pretty much bang on, but timey scale and stuff like that. But 30 pips, London Open for a little breakout. Didn't get the longs on it, but I'll cover that. And then there was, if you just waited for the ideal high probability zone to be in hit, got the 50 pip trade on there. So put that in the Discord for everyone. It's pretty inactive on the Discord, so I'm not sure how many people got it, but we covered it in the stream, put the alerts there, put the signal there. So I hope you guys maximized. Let's have a look at it. So let's break down the charts. So what I've got here is I have I've rewound the data. So I started the stream 7:30, was watching, put all the zones, discussed all the zones, discussed the ones I was looking at, predominantly this blue section over here, that this was the high probability zone. We had bullishness leading up to that. And at the time of 7:30, if I go to 30-minute chart real quick here, we didn't have this candle, this one here. So I'll replay that one. This is what the land of the lay of the land leading into the last 30 minutes or the second 30 minutes of the Frankfurt Open. What I really liked was this, like almost like a quadruple top from London on the Monday, thinking that, geez, you know what, there's a lot of liquidity lying up here. I'd love to make my way up to this area. And then I really wanted to see price hit in this blue section. The area that I had in mind was this gray bit with this like dotted lines. Really wanted to see that taken out. You can see this is, I haven't changed any of this since this morning. This was the idea that I'd placed, or if we did happen to just burst down and break down, then I'd be looking for those longs going up. So really there was, it was a lovely session. What this area here was, if I go back to the left, keep going, like London high, all this London high, quadruple top area, lovely liquidity, but it's even above this bit. So we keep on going right there. This candle, this one here is the one that I had my eye on. No top wick, just price pushed down, gap down. Really wanted to see price hit this and then react off of it. So that was the ideal area, is just at London Open, price being in this little area kind of makes it difficult because I know I'm going to have to wait a long time for it to get here. So what I wanted to do was take a London Open trade. Okay, so didn't want to take buys from here because pretty tough area to be trying to buy into. And we know that London Open will often follow like this candle, the 7:30 a.m. candle. So this is 7 o'clock. We need to see how the 7:30 one's going to form. So you get a pretty good idea if you watch the lower time frames. Okay, so let's just go forward. Okay, first 5 minutes of the London Open, creating like a little bit of a liquidity wick. Price wicked up higher than the candle to the left, closed nice and healthy and bearish. Okay, second one, so you're starting to create that little resistance. Now we're creating a little support, looking good. This is the first 15 minutes now completed of that 30-minute candle. Price pushes up, retest this wick area, just like I like to see. This is a liquidity candle as well, because it wicked higher than the candle to the left, closed below the high, retesting this wick. So it's looking like, and it's kind of weird. It's got a little gap in the price, but this is a lovely looking resistance being formed. Okay. Now, if we've got a resistance and we've got a little support, we want something to break a support so that we can start to have this like 4-point kind of cycle, like this, 0.1, 0.2, 0.3, and now closing below the low. Now we've kind of got like a bearish little trending structure kind of forming. If we don't close back above the support, then there's a good chance. Well, we know that at this stage there's a huge chance that the London Open this 30-minute candle is going to close bearish, but this could always be a fake out right here. So we just want to make sure that this last 5 minutes of this 30-minute candle doesn't close back above here like so. Okay, if it doesn't, then we're looking good. Okay, this is the next 5-minute candle. So this is now the close of the 30-minute candle. Looking good. If we go have a look at the 30 minutes now, 30-minute close of the bearish candle. Now, where can price go? We know often the London Open, the initial volume will follow this candle. So if we can get a wick back up and then starting to like break down, fill this wick, break this low, we can anticipate some downside. Only thing that is question mark here is that we've got like it is quite bullish momentum, right? So you've got to wonder how low it can go, right? So what you need to do is like think about how you're going to manage this trade before you even enter the trade. That I know that this London Open trade here from like if I'm trading the first 20 minutes, it's unlikely I get this really clean move. It does happen, but I know so many times it will come back on you. So what I want to do is I want to actually I want to take some partials around 20 to 30 pips and then hope it can keep on going down. But at least if I'm taking partials, then I know this is a high probability trade, but I know that going for like 50 pips or more in this first trade is a pretty low probability. So I'm going to stick with the high probability pippage. Okay, I can always take another trade if I need to. Let's have a look now at the lower time frames to try anticipate some targets. So if I go to the 3 minute, what I flagged straight away in the stream was that this is my no wick candle. So this one here is the one that created like, we got a sudden little sell order, and that created like a little imbalance. Quite often these no wicks, price comes back to take. Where can price now go to? If I have a look down here, I do see this kind of pattern. This one here is price sort of pushed up quite aggressively, a little gap, drift a little bit sideways, and then another nice strong push. Okay, so this area looks like there would probably be quite a lot of buy orders. So getting through this little zone could be a little bit troublesome. It kind of lines up with this area over to the left as well. So if we look over like a draw, like kind of like this area, that lines up pretty nicely. If I look at the 5 minute candle now, 5 minute chart, you can see right here where this had the no wick and this is the gaps. So like this is the ideal area. If you're going to assess some targets, don't try, when there's going to be quite choppy movement, don't try trade through that without taking some partials. Or if it is bouncing back off of that, just make sure that a winning trade doesn't become a losing trade. So where I took the trade is I'm not taking it in the very first like seconds, but what I wanted to see was price. Like what happened is it almost immediately came back up and retested this no wick candle, which was on the 3 minute. And I'm actually watching that candle. When I replay the data, you can't really get the same sort of, you can't get the feel for the candle, how it's moving, because you just get a candle printed as soon as I hit this little button. But what I was watching for was it to wick up. And then I want to see like hesitation, I want to see it sort of push back down, right? As it gets pushed back down and really failing to break higher, as it starts to push up, okay, start making its way back down, push up again, and then get rejected again. And then the candle start to flip from bullish back to bearish. Then I know that I'm in a pretty good, I know the sellers are coming back in. Then what we need to do, we need to fill this wick. Then we need to close below it. Well, we need to break it. And then often the second break, you get that real nice down momentum. So this is anticipation trade, right? I'm going to go to the 3 minute chart. You'll see the first 3 minutes wicked up. Okay, so to see how like the candle disappears, if you go back and watch the replay, it pushes up quite dramatically, then starts coming down, comes back up a little bit, and then starts to come and flipping bearish. So as it's flipping bearish, that's when I executed the trade. Okay, anticipating now this candle is going to close bearish, so we can get a nice entry rather than trying to enter, say, down here. So entry was taken around here. Then it was just a fairly quick rundown, next 3 minutes, just push straight down to target pretty much. The trade was done and dusted. And yeah, that was it, price came back up and then the runner got taken out. So if I have a look at the 5 minute now, where did it react from? Perfectly from this area, so good for 20, 30 pips, take some partials. Hopefully it can break down and keep on going down. But be careful often it will retest on you. Oh shoot, sorry about that. Now what I was hoping that price could potentially get down to this area, rebounce, and then start pushing up. I didn't totally take any other trades inside of this section. There were some lovely buys. There were some nice little reaction sells, but where the real nice trade came from was waiting for this high quality area to be hit. So I did put it in the Discord, thinking that, you know, if we get into the New York Open, okay, if we get into the New York Open area, so then if I was saying, if we can push up with volume at Comex Open 820 in New York time into this area, and then start like, you know, print a rejection from here, there's a huge chance we're going to push all the way down. Because, you know, think about it. New York won't buy the high. There's no way they'll buy the high without bringing price back down into like a discounted price. There's no way. There's no way. It very rarely happens. Price will often push down, or not this case, this one here kind of will put bullish, bullish, bullish. New York won't buy the high. They'll push price back down. Okay. Same thing. Huge bearish run. New York won't sell the low. They'll break the low and then they'll push price back up to get the sells themselves, nice discounted price, and then push down. Same thing over and over and over. Okay. Sold, sold down. New York won't sell the low. They'll push price back up, get a better price before having their little sell. So it's the same thing. It's rinse and repeat over and over and over. So let's go to, this was 12:20. So 12:20 because of daylight savings, right? And normally it's 1:20 this week. New York session's an hour earlier. For me, anyway, because I'm in the UK. 820 hits that area. Lovely, lovely rejection off of it. Got to wait for like, it's not the rejection yet, but it's stalling price. Okay, so test, then get a little bearish candle. Lovely little rejection. Combine this candle and this candle. Okay, so if you've got like a 10-minute candle, then this is a rejection wick, liquidity candle. And that's it. You know, just trust it. Trust your analysis. Trust your zones. If you got your zones right, the price action was beautiful. So, you know, came all the way back down, hit this This is the 5-minute. Sorry, I said I've wrote here 5-minute imbalance. This actually is. I noticed that later on. This was the 3-minute imbalance. So if I go back to the 3-minute chart, you'll see. Oh, wait a second. Oh, here it is down here. My bad. Okay, this is the 3-minute imbalance candle. This is where I took profit at this area, closed the trade 14,770, was into the trade around 14,820, 50 pip move, closed profit in full, and you see where it rejected from. Okay, look at the no wick candle again. So price action, you've got to take note of, right? Then the rest is history. No more trades that they're done for the day. So there you have it. 2 trades, one for the London Open in the stream, one called in the Discord that was clearly marked well ahead of time. Okay, alerts went off, executed on the 30-minute imbalance. Here just went with the 30-minute candle, pushing for momentum, 20, 30 pips. Tomorrow will be another day. So give the channel subscribe, hit the bell, drop a comment if you like. Tell me what you like, what you don't like about this sort of style, or you do want to see more of. So yeah, I'll leave it there. All right. Thanks, guys. See you tomorrow. Bye-bye.